Thank you, Mr. Chairman. I grew up in a town of 90 people. You can imagine my family had a relationship with the community bank, whether it was financing a home that you could never get an appraisal on, right? Because where are you going to find a comparable sale, right? Whether it was helping my father finance his business and cash flow his business, or looking at a farm that needed a quick operating loan because of some tragedy. I think the great irony of this is, in spite of all that relationship banking and that character banking that you do, you were not the institutions that failed, because you were banking every day on the American people and your relationship with the American people. And we want to get back there. And I think what you see here is a real bipartisan interest in getting this done. I know that you're probably here we go again, right? We're going to testify, and we're going to tell our story, and nothing happens. You have 75 co-sponsors on the privacy bill last year, and we didn't get it done. I am here to tell you that I think with the leadership here of Senator Shelby and Senator Brown and the commitment of this committee, we're going to get this done for you. So it's critically important that we know what your priorities are. And I applaud, I think Senator Corker took you through a couple that he sees and hears about, we all hear about, and I think Senator Crapo, said, okay, here it is. And I hope that you share that document with all of us, because we want to get this right. So with that was kind of my first line of questioning. What 2-3 things are the highest priority, will take the most amount of burden, give you the biggest bang for the buck, that we know we can do without creating an environment of systemic failure, or without unraveling necessary controls to make sure that we don't have a repeat of 2008. So I'm going to ask you a little different question. We hear all the time about trickle-down of best practices, right? So all of a sudden someone comes in and says, well, we just examined Wells, and Wells is doing it this way, so we want you to do it this way. So that examiner piece, that fear of the heart attack letter, or as you explained, what happens when you don't have someone who can be a monitor or adjust what a maybe overzealous examiner would do. That's also something, and that's a little tougher for us to get at. And so I'd like to examine that a little bit more on what you think would be. You obviously didn't like the ombudsman suggestion, so I'm looking for alternatives to deal with the examination issues that you have. And we can start with you, Mr. Blankton.
You're right. That's a very, very difficult question to ask, because there's so many, with so many examiners out there, there's so many different approaches on each exam. But we do come into areas such as, in my bank, are you stress testing your loan portfolio? Well, I'm not required to do that. But they say, well, yeah, but you really need to. I mean, and I understand where they're coming from, but there's just some things. My bank doesn't represent a risk to anything. I mean, I'm sorry. If I go away, there's nothing in this economy that has changed. And I think, therefore, I need to be regulated and examined in that same way.
But your community will change.
My community will change, yes, ma'am. It most certainly will. But I think I need to be regulated that way, and I need to be examined that way, to where it meets my risk profile.
Some kind of change that we can make here is what I'm after, where you would feel comfortable that you had a legitimate second look from an examiner.
Yeah, we believe that an independent process is highly needed for the examination process. We don't really feel like in the credit union world we have an effective appeals process right now. We don't have an ombudsman that we feel we can go to. Our appeals process is up the food chain at the examiner that oversees us. So it doesn't work. It's not effective, and therefore it's not utilized. And you're absolutely right about the best practices trickle-down effect. It is very real, and it is very influential, and it happens from all levels. One of the things we're dealing with in the credit union world right now is some perceived notion that interest rates are going to explode in the very near future. Okay, and so we're being asked to shock test our balance sheets for incredibly high interest rate shocks, well beyond what's called for in any regulation. That request is coming from examiners who are getting it from higher up in the agency. That's unreasonable, it's illogical, and it costs a lot of time and money. And we can receive a nice ding on our examination if we either don't do it or if those results don't come out favorably.
Best practices is real. It happens. We get asked to do reports. not because they're required by regulatory reasons, but they're required by one examiner. And then that report stays with you, and it's like snowflakes. You know, I mean, you're from North Dakota, you understand this, that you walked out this morning and it was beautiful, it was snowing, and it was light. But then you go out to Buffalo,
North
New York.
Dakota.
Oh, yeah, for me. But you go out to Buffalo where they have 6 feet of snow, and that's not. And that's what we've got here is the cumulative effect. Now, it's the cumulative effect at these examinations where they are constantly, they're in your house. It's not every 12 months or 18 months. They're there all the time. I get a quarterly call from my examiner. I'm submitting paperwork every quarter to them. They are with us. If you move that exam cycle, this is something that you can do. Move that exam cycle to 24 months for 1 and 2 banks, 1 and 2 Camel-rated banks. That is going to provide us some relief. That's going to give us greater time to work with the regulators, work through this process. We won't have to jump to the ombudsman so fast because we got another exam coming up.
I concur with Mr. Brewmaster's suggestion to increase the exam schedule timeframe. That gives us more time to do things, more time to move the ship. In terms of the ombudsman, I think the ombudsman could be a good thing just because it's somebody independent watching, okay? And sometimes knowing that somebody watching makes you do things slightly different. And it's always a relief valve. In my institution, in 40-plus years, I've only had 1 or 2 examiners that I've had difficulty communicating with, and even then I wouldn't have needed to go to an ombudsman because it wasn't that severe. So I think one of the first things in the examination process needs to be to try to establish a meaningful dialogue between the examiner and the institution. Sit down and talk about what are we trying to accomplish here? What are you looking for? What do you want? Let me know when you have headaches. Let me know when you have problems. And a lot of that can go a long way for easing pains. Now, there's always a rogue financial institution who doesn't want to talk to an examiner, sees them as their enemy. You've got a rogue examiner on the other side. So it's not a perfect world, but communication starts it towards the right place. Ombudsman is just that little safety net hanging there just in case.
I think the real key is where we started here, and it's targeting this relief to community financial institutions. They do have a different model, and that can call for different approaches. But once these things get blurred and say, you know, we're going to change the system for everybody, even if they're 100 billion, 500 billion, that is a different banking model. It is not the relationship lending. It's not the community focus. And so these need to be targeted. I mean, 90% of community financial institutions are $1 billion or less. That's very different from once people were talking $50 billion or $100 billion, as sometimes gets tossed around.